Good morning, traders. Richard here. This is this week's Ichimoku Cloud Chart market update on the Nasdaq Composite, the Nasdaq 100 Index, Nasdaq Equal Weighted Index, and the Nasdaq 100 Excluding Tech Index. And so we've reached our next target, price target here. So we had a last update. We were right here at the 50%, 25,684 target. Then we hit the 61.8% Fibonacci extension target, hit that zone. Now the next target is just above 27,357. So do expect the Nasdaq Composite to maybe hit that 27 target zone. Will be interesting to see if we can maintain that upwards momentum. Critical levels to watch out for is this turning line of the Ichimoku cloud. That can be support in case we get a bit of a consolidation of this move before another attempt to hit the 27,000 target. And we a little bit, the risk factor is that we're a little bit extended from the top end of the Ichimoku cloud, so there is consolidation risk back down to the turning line and the standard line, and by that time the standard line should have caught up with at least the 25,000 zone. So keep these levels in the back of your mind. So far, very strong move in the markets. After breaking out of this consolidation base, beautiful recovery from Ichimoku Cloud Chart support levels there. So hitting the upside targets, now hit the fourth target basically. 1, 2, 3, fourth target, and then the fifth target is right up here above the 27,000 zone. So keep these levels in mind. Now the Nasdaq 100 is very close to the top end Fibonacci target of 29,475. We've hitched the other four targets to this 26.9, 27.4, 27.8, 28.2. Very strong move there, almost 12% rally from the base breakout here. Watch out for the standard line of Ichimoku Cloud. That's a new support zone, so any kind of weakness to that zone can be seen as another swing trade to the upside if you're trading the futures in the index here. But so far so good, very strong move, and hitting the upside resistance targets in the market now, so keep that one. 29,475 is the Nasdaq 100 upside target. Now the equal weighted index, nice strong market there on the equal weighted index, hitting the targets there. The 10,000 targets quite far away though, so will be interesting to see if we get there. Could see a bit of a consolidation back here up the turning line of the Ichimoku cloud, and then another move higher from that zone. Once again, very extended from the top end of the Ichimoku cloud. So we are moving into risky consolidation phases in the market. Now the risk factor, the biggest risk factor you investors need to take hold is the Nasdaq 100 excluding tech index, and that's almost made a new low for May. So you can see there's quite a big divergence between the strong tech index that's driving the market and the Nasdaq 100 excluding tech has actually made a new low in May. So that's a really big risk factor. What we'd really like to see is the broadening of the market and a potential rebound from this index in and around these support zones, but we really need to see it breaking past this top end Ichimoku Cloud Chart resistance zone. So not healthy. If you lift the hood up, the market is actually not that healthy right now, because the Nasdaq 100 excluding tech is actually hitting new lows for the May month so far. So we look like we might hit that March low again to retest that for support at the 5729 zone. So we're not out the woods yet in terms of the market, so don't get too caught up with these highs here in the market. Do know there's a lot of consolidation risk in the market because we're quite extended from the top end of the Ichimoku cloud, as well as the Nasdaq excluding tech is making a new low for May. Until next time, thank you for watching and happy cloud chart trading. Bye for now.